to the Investing Podcast presented by Tusk Media. For a quick audio and video check-in on the stock market, here's the Stock Market Power Lunch.
What's up, everybody? Welcome back to the Investing Podcast presented by Tusk Media. Today is Wednesday, June 22nd, 2016. This is your Stock Market Power Lunch. Quick shout out. Monster.com, your hiring resource. They sent us this mug, so they're providing my liquid grit for the day. Quick promotion we're going to do here. We're sending out koozies to everybody that screenshots and tweets at us and says, hey, I'm listening to the podcast. So if you're listening, do a screenshot, tweet at us at Tusk Media LLC, and we'll send you one of these bad boys. Totally free, nothing to it. Along those lines, if you want to send us something free, send us your corporate mug. We will drink out of it on air, and we'll talk about it for a little while. So address is on our website, narwhalcapital.com. You can check it out, or if you want to know more about how you can send me a mug to drink out of, just tweet at us, Tusk Media LLC. Bond week next week. Email us your questions about bonds, theinvestingpodcast@gmail.com. It's going to be the hottest week of the summer. It's going to be absolutely insane. I've heard that Discovery Channel is really bulking up their ad buys this week heading into Shark Week, because Shark Week's trying to compete with us. It's not going to end well, folks. I'll tell you that right now. So good luck out there, Sharks. Bonds are coming. That's all I can really say about that. The market's up again today. Going to have to come up with a new gimmick. Monday I did all those awesome, hilarious puns. Yesterday I wore green pants to represent the market's going up. Today markets are up, and I don't have anything to do yet. I'll come up with something by investing happy hour time. But the Dow's up 38 basis points. S&P is up 48. NASDAQ's up 64 basis points. Get gold down a little bit, oil up a little bit. The big sector move for the day is the healthcare sector. So within the S&P 500, healthcare stocks are up about 1.2%. So strong lead for those stocks today. The big story there is that House Republicans have come up with a plan should there be a Republican in the Oval Office come next year. Their plan is basically to get rid of the Affordable Care Act, Obamacare as it's more commonly known by some, and basically introduce tax credits that can go towards the purchasing of private insurance plans. So I guess the market's reading this as good news that, hey, there's actually a plan in place and it may not totally disrupt the flow of how these things are working. And a lot of people are apparently viewing that as good news, at least in the short term, and excited that there is a plan. We're going to bring up here in just a second Mr. Matt Krebsbach. He is our solar panelist. In all seriousness, he's our alternative energy guru. Listen to his interview from Monday night. It's still on that podcast feed. Hit subscribe. It's right there. It's about an hour long. So he's going to come up and talk a little bit about a deal that we talked about this morning, or at least referenced, and it's the Solar City Tesla deal. So Matt, come on up. Tell us what you're looking at in this deal, what's going on, the prices, and the things that are good or bad about this deal.
Yeah, so yesterday Tesla made an offer to acquire Solar City in an all-stock transaction. Solar City closed yesterday at around $21, and based on the ratios, it'll be around $26 to $28 a share of the buyout price. If I was a shareholder of either company, I wouldn't necessarily like this deal. If I'm Solar City, I would think that as a company, it would blow up in itself. The residential solar market would, and you'd make a lot more money based on Solar City itself. I mean,
so you're thinking that 30 to 35% premium is not enough if you're a current shareholder.
Yeah, exactly. And at the beginning of the year, the beginning of this year is trading at around $50 a share. So I mean, if you're buying then,
you're still taking a hit.
You're taking a pretty big hit.
Yeah.
And if you're Tesla, I have kind of three main issues with it from a corporate governance perspective. Elon Musk has two first cousins on the board or high directors at Solar City, and they've been dumping their shares over the years, which is kind of a red flag in a way. And Elon himself has been buying Solar City below the price a couple months ago, so that's iffy to me.
Yeah,
you know?
a little iffy.
And like I mentioned in our interview, Solar City has a lot of debt on their books, and they're generating a lot of negative cash flow, which is going to be another drag on Tesla. They might have to raise more equity faster than they have been. And the last issue that I have was their focus on operations. Kind of the main thing with Tesla is getting the Gigafactory finished and getting Model 3 production as efficient and as fast as possible, and that kind of takes away from the focus. But if you're investing in Tesla for the idea of just investing in Elon Musk, investing in and the idea of like a new world of energy, kind of, I mean, that idea doesn't really change like really long term. So if you're investing for that perspective, it's probably just take it as it goes.
Yeah. There we go. So that's kind of the rundown on the deal. Again, check out Matt's interview. We talked actually about both of those companies recently. We're going to wrap it up there, but quick shout out to you guys for listening and watching, especially those watching our investing video podcast. We're dominating the iTunes charts right now, and I'm not even being facetious. Not 1, not 2, not 3,
Not 4.
not 4, not 5, not 6. I'm talking 7 top 10 individual episodes on the investing page for video podcasts. Seriously, we have 7 out of 10, which is, I think, especially impressive because we only have 8 of these bad boys up. We refuse to pay for storage.
What happened to that last one?
It's up there. So like we keep them and then we just delete old ones. So we just kind of shuffle it. You can find everything on our YouTube page. If you go to YouTube and search Tusk Media, it's right there. Or if you click the description of this episode, it's actually got a link to our YouTube page. So we have all the videos, but we refuse to pay extra for storage. So we kind of shuffle those in. So right now, 7 of our 8 episodes are among the top 10 for our category, and they happen to be ranked 1 through 7, which is I don't know how to explain it.
So explainable.
It's unexplainable, inexplicable. I don't know the difference between those 2 words or if they even are both words, but that's what we're here for. We'll find out later. We'll talk to you guys for the investing happy hour in just a little bit. Y'all have a great afternoon. Eat a big lunch for me.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.